We got Brad and James here at Encompass Lending. Alexis is coming on too. Anyway, this is the first meeting of our bi-weekly meetings for learning loan products, asking any questions we have about loans, what kind of products are out there, so we can help better educate our borrowers and get more business. So with that, I'm going to turn the time over to Brad and just have him start, and we'll go from there.
Cool. Thanks, Paul.
Yep.
Yeah, really the idea behind these, biweekly classes is, really just to help get you familiarized with the different types of programs out there so that when you are, having dialogue with somebody, either over the phone or email or text, that you could say, we can make something work. And so, little background, Encompass Lending Group is owned by Fathom Holdings. So we're part of the family brands within the publicly traded Fathom family. Can't talk today. But we are a direct lender, so that means that we have all the normal basic products, your conventional USDA, VA, FHA. Those are all done in-house, and then we'll get your more obscure types of programs, and we will broker those out. And those can consist of non-warrantable condos, so it's still a conventional loan, all the way to asset utilization or asset depletion. We can even go through bank statement programs, reverse mortgages, debt service or DSCR, which is where somebody's buying an income property and they're not necessarily qualifying themselves. It's just strictly comparing the rents to the property. And we can even get into construction loans, not only for, like your FHA 203K, where that is rehabbing a home, right? So you come across somebody that you find a home that, just is really bad, dire repair. We can rehab it, and we can also then do full construction with engineering and blueprints and plans and, just a blank lot. So we have the ability to, do just about anything. James, you want to jump in and go over anything that I missed?
Yeah, I don't think there's a lot that you missed. I mean, the key is that if there's a loan out there, we 99% of the time will be able to do it, whether it's in-house or sending it out to one of our investors. Um, the DSCR loan has become a lot more popular with investors being able to buy property, not have to show any financials, not have to show income. You don't have to show proof of income. It strictly goes off of whether the rent on that property through a net rent analysis, if the rent is more than the mortgage payment. And that's what does the qualifying. Of course, their credit does as well, but there's no income documentation or anything like that. So it's a great product for investors. And I know we have a lot of investment properties here in the Vegas Valley. So that's definitely one you might want to think of if you do have some clients that want to buy investment properties, but maybe they have too many. This product does not care how many. They can close in a company name, LLC. That part doesn't matter either. So it's really flexible for investors, and it makes it a lot easier on them to be able to close because they don't have to show proof of income.
Yeah, no, that's a great point. And, those are great, easy programs. And as long as you got the right, property, they're going to cash flow. So they work really, really well. One topic that, we can mention briefly, is reverse mortgages. Because, I mean, you've got, a lot of second homes, but you do have, your older communities too. So those are great for, somebody moving up, moving down, You can use reverse to purchase, as well as using it to obviously free up cash flow. So for an agent, even though an agent doesn't necessarily usually get involved into refinances and that type of financing, it is still good to have an understanding to it, because if you can brand yourself to be the go-to person and the point of contact. So even if you're not going to make something on that one particular deal, you're going to still grow your business and be able to stay in contact with people. So I think that's probably one of the hardest things for agents to understand, is it's not just about the transaction, although a lot of agents are very transactional.
Yeah, I think with the reverse mortgage or HCM, it's more gently called now. Um, it also helps with kind of generational wealth and spreading that generational wealth out, because you can have an older borrower that will do the reverse mortgage on their primary residence. They then can gift money towards kids or grandkids to be able to buy property, buy their first home, things like that, and not have to worry about the tax ramifications of um, inheritance tax and things like that. So, and by doing the reverse mortgage, of course, they're not going to have a payment on their home. So it's just another option. It's also a great way for them to buy a second home or investment property, because they can do the reverse mortgage on their primary residence, use the cash out from that, and do a reverse mortgage purchase on either a second home or an investment property if they want to add some income during their retirement.
Yeah, absolutely.
So I have questions on two.
Please.
I mean, the reverse mortgage, do you have to have your house paid off, and how does that work? I mean, I've never done one, so I have no clue on how you qualify, and if you have to pay it back, and all of the
Yeah.
details on that.
So the minimum age requirement is 62 years old. The idea behind a reverse is, yes, you have equity in your home. And so a regular forward mortgage is you take a loan balance, it's set, right? It's amortized then, and that's where the principal and interest payment comes into play. Reverse mortgage will be the opposite. You'll have the equity, you'll have essentially a line that will run up, and you can set them up to really kind of custom tailor to what the borrower's needs are. So if they wanted to take out one lump sum, they can, although that's not the usual. It's usually very rare that anybody does that. But then it would accrue interest on that money. But most cases, it's either taken out in increments, or it's taken out in set disbursements on a monthly basis. And that's usually the most popular one, because that's what it's used for. Essentially, is you're not having a mortgage payment, and you're able then to tap in and supplement your income. Let's say somebody is needing care, and they need an extra $3,000 a month. So that you could tap into that equity, and they could receive literally, tax-free $3,000 a month into their bank account every month. And then the interest, of course, that balance is going to grow every month because you're taking a disbursement, and your interest charges are going to grow accordingly. And that's where it's very user friendly when you get into these things, which is also why the reverse mortgage term is really kind of going away. And to James' point, they call them HECMs, which is home equity conversion mortgage. Am I right? Is that what it is? Yeah. So, it's an ideal piece for a lot of people, because some people, especially that generation, will end up being very equity rich, and sometimes to a fault, to where that's all they did was live, breathe, eat, sleep to pay off that mortgage, and then not have anything moving forward. And some of them are, cash poor, eating top ramen. And those are the sad stories that, a HECM will actually really help them to overcome.
So when does the reverse mortgage get paid back?
So reverse mortgages, excuse me, they get paid back when the individual is no longer living in the property. So if they pass, then the options at that point, which most of them will give a 1 year time period to figure out. And within that year, it'll be either sell the property and pay it off, or refinance the property by the next of kin. Whoever's taken over that property will then refinance it into their name under their ownership, and then that's when the reverse will get paid.
Okay, so there's like a certain percentage of equity that you have to have, right?
Yeah, so it's a big algorithm basically. The older you are, the more tolerant they're going to be, because your life expectancy isn't as long.
Right.
Yeah. So
Okay.
kind of an idea. So if you're just at 62, usually James will be, I think it's what, like 35% ish,
Correct.
somewhere in there.
Yeah. And if they're married, both husband and wife, however it works, need to be on the loan. So both need to be at least 62.
Yep.
Okay.
Yep.
And
Whereas you take somebody that's 90, they'll allow probably more like 75% loan to value.
Right.
so like a good scenario would be if somebody's going to retire at 62, their retirement isn't bringing enough money in to pay that mortgage payment that they still have, they could get that extra 500, 1,000 every month to make it
Or just
Yeah.
wash away the mortgage payment altogether.
Right.
So I've done that where, they owe 200,000, house is worth 6, as an example. We do a HECM for the 200,000. It pays off their first mortgage, and they don't necessarily need any disbursements, but now they don't have to write a check every month. So that in itself might be saving them 12, 13, $1,400 a month.
Very cool. Great. Okay.
Yeah, I find that's probably the biggest reason people will do the HECM is to just get rid of that mortgage payment while they're retired because it's difficult to refinance because they no longer have the same income as when they were working.
Right.
So the HECM alleviates all that problem because it's not income based. It's purely equity based and age based.
Yep, those are the two biggest things: age and the equity, and then credit plays into it also just mainly just because they want to make sure that they don't have anything looming that could be big, litigations, civil issues, and so forth. So they're pretty lenient on credit, but they do want to make sure that certain things are not looming over their head.
Cool.
Yeah,
And
the HECMs are a great um, conversation piece, because what a lot of people don't realize is, there's a big stigma that comes with the, reverse mortgages of the past, right? 15, 20 years ago. It was kind of a free for all. There was even, some predatory lending, which, Dodd-Frank helped to reduce and remove in some cases. But what really started changing it is, and when they changed the term to HECM, is when FHA stepped in to take over that whole industry. Now there are some reverse mortgages that are done outside of FHA, but 95% of them are done through FHA. So as you know, FHA, has strict regulations, and so that's what's really cleaned up the program to make it very user friendly for our elderly, so that they're not being taken advantage of and they're not being put into bad situations that setting them up for failure.
yeah. One more question.
Yeah.
While I have it on my mind, the DSCR loan, can that 20% down be gifted?
I don't believe so.
Okay.
I don't believe
James?
so either. No.
Yeah, because even a regular Fannie loan won't allow a gift on an investment property. So I don't believe DSCR will allow that.
Okay.
I think
So
there's so
what I would
little.
say there, oops, go ahead, James.
No, I just think there's so little that the lender is looking at or underwriter is looking at on a DSCR loan. They've got to at least have their own money into it.
Yeah, I think they're, because also too, because then it can be construed as a straw buyer also.
Very true. Yeah.
What if you get an investor to give you an investor loan? Like say you want to buy an apartment building for 25 million and you get an investor to give you 20%. I mean, does that,
Well,
would
this
that
would not
even
be for
work?
commercial. This would just be residential. So that
Okay,
would be that wouldn't play into it. I mean, there's ways you can get around that. We only look at 60 days of bank statements. So if they're going to do something like that, they would have to do
Yeah,
it
just season
prior
the
to the
money.
60 days and season that money.
okay.
Yeah, just season the money. We do though. The SCRs have opened up into that small little pocket of 5 to 8 units also. So
So
without having to go full commercial, so you can get into those. It's definitely not residential because it's over 4, but it caps out at 8, and then you can use the same DSCR for those also.
Okay, cool.
yeah, which that's really unusual because everything
It
else
is
we do is
unusual.
up to 4 units. So being able to go to up to 8 is definitely a huge benefit, not having to go commercial, which
Yeah.
is a headache.
Well, especially for those, those 8 units, right? 6, 8, those are always so shitty because, there's a huge opportunity for those small complexes, but everybody is classifying everything commercially for them. So your pools, your insurance, your regulations on railings and all of it, all runs to commercial standards. So they end up paying far more because they don't have the units to offset um, the commercial pricing. So they always end up taking some big hits sometimes, on their cap rate. And so being able to utilize something like DSCR and not having to qualify normal really works huge for those types of properties.
Very good.
Probably another good one is bank statement program. Usually it's 12 months. It's for the self-employed borrower that a lot of them are, meaning what they cash flow and what they document are two different things. And so a lot of them won't be able to qualify for a loan because of the deductions that they show on their tax returns. So bank statement programs, really great utilization for self-employed borrowers to get a loan, be able to qualify um, with no tax returns.
And on the bank statement loan, does it have to be a business account?
They prefer it. They
It'll
will
depend on.
use personal because you might get a handyman or a real estate agent while we're talking on this that commingles, right? Which they have every right legally to do if they're just a regular sole proprietor. Um, so what will happen though is that those will be scrutinized a little bit differently because it's harder to gauge what's business related versus personal use.
Yeah.
So they usually will take a little different threshold on the expenses uh, of those deposits, but it still can be done commingled. But they prefer it being isolated with a business name. Sometimes it's in a corporation. It just depends on
And
what
I've
the
got personal experience on the business bank statement part of it that they can be done on permanent resident or even I-10.
Yep.
So it's just a little bit of a down payment hit if it's I-10 as opposed to permanent resident. Permanent resident's 10% down. I-10 was 20% down. Although I did get one pushed through where she didn't have her green card. She just had a work authorization, and they ended up taking that as proof of permanent residency. So they were able to do 10% down. And fortunately, it was a gal and her husband, Spanish speaking. So they had been using a Spanish speaking loan officer in St. George, and the loan officer was just kind of dragging his feet. So I got the loan from the Fathom agent in St. George and took it, and we were able to get it closed. Well, right at the end, the other the other loan officer ended up. The reason they sent it to me is because he was charging $12,000 more than what I was showing on my loan estimate. And in the end, he ended up having to drop their loan to value from 90% that we were at down to 85%. So it really worked out great for them. They saved a lot of money. And yes, I-10 loan is no Social Security. Oh, thanks, Paul. Um, So it worked out great for them that, we're able to keep them at a 90% loan to value, only 10% down, and saved them the $12,000 in fees that the other broker was charging.
Yeah, that's awesome. Very, very cool. Ma, do you have any questions?
Right now, thank you.
No problem. Just want to make sure, I know sometimes we talk fast and we use a lot of acronyms. Um,
Yeah, sorry about
and,
that.
and it's hard not to, just because it is the industry, unfortunately, like DSER. But I always like to make sure, the questions are answered, and to your point, Paul, you're writing them down as we're talking, and then it's always good to, go backwards and revisit those, make sure we get answers to everybody.
Yeah, Haley, are you still with us?
Yes, I am.
Cool. Do you have any questions?
No, no. Well, you know what? I just wanted to make sure I understand. With that reverse mortgage, you said that the balance and the interest continues to grow. So you're meaning every month that the homeowner is collecting their monthly payment, their disbursement, that's every month that the balance is growing and that balance is being charged interest.
Yep.
Correct.
Okay.
100% correct. And so some people would be like, why would I want to do that? That's compounding interest. And they are correct, right? And this is why it's not for everybody. But when you compare something like that, where they have money just sitting there, it's doing nothing for them. And you're talking about somebody's lifestyle being negatively impacted by having to make that mortgage payment because maybe they are, on a strict fixed income and they have no fluctuation in there, but costs of goods and services continue to rise with inflation. This is now, we're talking about somebody's livelihood and their lifestyle, and you can't put a price on that. So that's where now you just have to look at it for what it is, and that's just the cost of doing business. But we're giving somebody their livelihood back,
Right.
and that's where it becomes priceless. But again, it's not for everybody, and that's why there are some really strict criteria on educating people before they get into it. So before we can even take an app, they have to do a course. Most of them are online now, but there are still some in person. But essentially, it's what is it, James? A couple hours, I think, hour and a half.
Hours, and just kind of goes over the pros and cons of reverse mortgage so that they're fully aware of what they are and how it can help them, but also hurt them because it's taking away their equity over time. Um, like I said, a lot of people will use it just to get rid of a mortgage payment. But a lot of them too will just they can let most of it sit in a line of credit and use it, for example, healthcare down the road.
Mhm.
Obviously, as we all get older, healthcare becomes more and more important. So that's also a big component of these reverse mortgages. Instead of having family have to step in and help, grandma or grandpa with needs or anything, this can kind of set them up before those type of things come into play, where they've set themselves up to make sure that their healthcare is taken care of.
Yeah, I had one that elderly woman. She was she had her money in with a financial advisor. That financial advisor, she had it reviewed by another financial advisor, and he uncovered the fact that the original financial planner was moving her money around on a regular basis and then taking commissions on that money, which, she was 88 years old. So, the new financial planner was like, there's no reason, let's just put it in one place. You're going to earn X amount, and there's no reason to, have that money bouncing around. It's too risky at her age. And then then we set it up to where she took a chunk of her equity and he also invested that in a different avenue so that she was, very diverse. And at the time, interest rates were lower. So it was almost free money at that point, right? Now, as time progresses and then, interest rates are now higher. And you always have to keep that in mind, but because most of the HECMs are going to be on a variable rate. They're not usually on a fixed rate. And that's because they have to be able to move, because we're talking about loan amounts changing, or balances. We're talking about equity changing. So they need them to be on a variable rate to stay flexible from an ROI standpoint. So, what else is there? I mean, we're coming up here on the half-hour mark. I just want to make sure we get all the questions, and then I think what we'll do is, because we do have a lot of questions on reverses, let's plan for next meeting in 2 weeks, and we can definitely go over a little more detail on maybe some scenarios and so forth, so that people can see how to really utilize it. I mean, we kind of gave a 30,000 foot level marking of it. You know what I mean?
And maybe the top of the meeting next time, we could focus on the primary loans that most people are getting right now, so that we can help our agents understand, you know, what type of first-time home buyer loans are there, and what can I do to help
Yeah.
my
Absolutely.
buyers, and what do I need? Are there grants available? Anything that you guys can share with us would be great, to help us to market to potential buyers. So
Absolutely.
we-
That's why we want to do these things and keep them coming, consistently.
Yep.
Because there's so much out there as far as information, and sometimes it's hard to convey it all.
perfect. Yeah, so I think we could probably wrap up today, unless we have any more questions. You guys have any more questions?
Are we doing these for an hour, or are we doing these for half hour?
Today we can do it for half hour. I think it'll be between 30 and 60 minutes, whatever it takes.
Okay.
But I put an hour on there.
Got it. Yeah, I didn't even look at it. So, okay.
So, and mainly as we get more questions and different, maybe we might have 20 people on the call. It'll definitely have to go an hour, so.
Yeah, 100%.
Yeah.
And that's when
Okay.
it's really beneficial, because then, you get somebody that, throws a scenario out there, and they're, bringing it to the table of something that maybe somebody they talk to, their neighbor or whatever. And it really then turns into a training opportunity for everyone.
Yep, perfect. So, any questions before we go?
No.
Okay,
We got a
cool.
quiet bunch today. That's all right.
Yeah.